Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Thursday, it's the 25th of January. My name is Russell Shaw. I'm a senior market specialist at FXCM. And what I'd like to do before we get started with the live stream is just take you through some of our disclaimers. And the first is going to be the high risk investment warning. I'm just going to keep this on screen for a few moments. If you can have a read through that, please. Hey, Raj, good morning to you. Welcome. Okay, let's take a look at the market commentaries disclaimer. Just going ahead and bringing that up. Just give me a few moments to keep that on screen. If you can have a read through that, please. All right. Good. Just in terms of the economic news, yesterday with the PMIs, we did mention that on Tuesday just to keep a lookout. The European PMIs were, specifically in the services area, were really bad, really came in poor. Even the manufacturing, which generally beat expectations, were below 50. So there's contraction, economic contraction in the euro area. In terms of the UK, manufacturing's contracting. Services did beat estimates. It's above 50. And then, of course, the standout performer, no doubt, the US. Okay, so that's just worth mentioning. Another thing that is worth mentioning this morning is the hey, Andrin, good morning to you. Yeah, the stream's live. Yeah, good morning to you. And another thing worth mentioning today is going to be the ECB. ECB is going to come out with its main refinancing rate at 3:15 ZA, 1:15 UK. We're also going to get GDP numbers out of the US at 3:30 p.m. ZA, 1:30 p.m. UK, and core durable goods, same time. Okay, so just keep an eye out for that. All right, I found yesterday's real yield data quite challenging. Let's go ahead and share that. So I'm going to just share the. Just going to go ahead and share the real yield, guys. This line study that we drew in, this arrow down, we drew that in yesterday. Hey Mia, good morning to you. Welcome. But take a look what happened yesterday. Gee, it's a difficult candle. Hey Anna, good morning to you. Anna, I did see your comment just at the end. I kind of logged out, logged back in when you said you don't like this platform, and I hear you. It's just this platform just makes business sense, much more reach. So I just wanted to sort of answer that. Let's just take a look at. We looked at the resistance area yesterday, didn't we? But then this. Hey, Indra, morning to you. Can you see this? This candlestick was actually a red candlestick when we did the live stream yesterday, and it's popped higher. See this pop? It actually, so it went down and then it reverse went higher. So that's quite challenging. The real rate pushed up, sort of as the day went on yesterday. That's interesting. Just in terms of the US dollar, let's just put US dollar underneath that and just see what kind of an effect that had. All right, and you can see that it just gave the US dollar some legs towards the end of the trading day. We've got that candlestick that's got a buying tail. Yeah, all right. Just keep me sort of in the loop there, Anna. If you're having really a bad experience, just email me. I'll see if there's anything I can do. All right. I'm hoping it kind of smooths out. All right. So you could just see that as the real rate reversed yesterday, it put in this buying tail for the US dollar. Let's just keep on top of the real rate for the next few trading days. What I'd like to do this morning is just revisit S&P 500. I want to take a look at the RSP. That's the equally weighted index, and then I think let's take a look at some of the Magnificent Seven stocks this morning. We'll do sort of a top-down analysis there, just to keep on top of what's happening with the Magnificent Seven, effectively the 7 stocks which are supposedly leading the S&P 500 up. So I hope this is going to be an informative session this morning, a little bit of a change up. So just instead of looking at real rate, US dollar, etc., focus mainly on SPX 500, RSP, and the Magnificent Seven. So with that all said, let's go through to the weekly, and let's just bring up the SPX 500, and then we'll take a look at RSP as well. So I'm just going to share the weekly SPX 500 tab that you should be able to see now. By the way, if there's any sort of jamming up of the charts, just let me know, and I'll see if I can. But so far, it looks to be okay. Here's the SPX 500, right? So what do we want to do here? Let's take a look at the SPX 500 relative to a trend following indicator. Which trend following indicator do we typically use? 30-week exponential moving average. Why do we use the 30-week exponential moving average? No special reason. It's the EMA that was used by Stan Weinstein in his book, How to Profit in a Bull and a Bear Market. I have seen another one of the courses that I did earlier, sort of when I was much younger, looked at a similar type of methodology, but they used the 34-week exponential moving average. I don't think it's a big difference there. Here's the 30-week. Look at the 30-week. It's the S&P 500 is on top of that 30-week exponential moving average, and that importantly, this is the big deal. What's the direction of the moving average? The moving average is pushing up. We're using that as a filter. So it's by all indications bullish. And then if you take a look at the RSI, it's not quite overbought yet. It's tending towards overbought. We're not quite there yet. But importantly, it's above 50. So the S&P 500 on a weekly basis, sort of a primary type of basis, is looking pretty good. Let's do the same analysis with RSP. RSP is equally weighted. Let's just understand the difference between SPX and RSP just before we do the technicals. SPX 500 is what we call a market capitalization index. In other words, there is a much heavier weighting to the big stocks, the ones with the bigger market caps, right? Whereas RSP equally weights all of the 500. I think there's actually 501, subject to correction. But let's just call it 500. It equally weights the 500 stocks, right? So what we're going to do is we're just going to go from SPX 500, just RSP, and you'll see that's the Invesco ETF, equally weighted, important. Let's go ahead, put that in. All right. Let's take out the drawings. Let's take out the drawings. Okay. So there is some positivity here. It's above that 30-week exponential moving average. That's very good. What direction is the exponential moving average? The exponential moving average is pointing to the northeast. That's good. Okay, so there's positivity there. And the RSP's RSI is above 50. Importantly, it does look like it's hooking up. It does look, but disappointingly, take a look here. Just watch this. Where's my arrow? Let's just put in an arrow here. We're getting a negative week on the RSP. Okay, it's Thursday. We're getting a negative week. Let's just go back to SPX 500. Let's just go back to SPX 500. Okay. We're using the FXCM CFD there. We're not having a negative week on the market cap. Can you guys see? So there is a divergence between the equal weighted and the market cap. In other words, it's the strongest stocks which are really driving the S&P 500. Does everyone understand that? It's very important. A healthy stock market has broad participation. That's what we want to see. We want to see that broad participation. So we'll keep an eye on the RSP. Hopefully, we've seen that RSR hooking up, and we want to see that RSR continuing upwards, right? So something for us to keep an eye on. So there's a few things on our sort of agenda going forward. One of them is to keep an eye on the real rate, because that real rate yesterday had a weird type of a really weird type of market action. And then we want to just make sure that the broader market shows participation, because that's healthy. It's called market breadth. Okay, we want to see a healthy market breadth, broad participation. Okay. Having said that, clearly the bigger cap, the larger cap stocks are outperforming here. Okay, clearly. So what we're going to do is we're just going to do an analysis of what's called the Magnificent Seven. The first one we're going to look at is Alphabet. Okay, that's the parent company of Google. So let's do a top-down analysis there. So we'll put in Google. All right, now here's the top-down analysis. Okay, where is it relative to the 30-week exponential moving average? It's above it. What direction is that 30-week exponential moving average? It's moving northeast. What about the RSI? This RSI is looking really strong. So what we've done here is we've actually broken a trend line. Let me change the color of this arrow, because there's red on red. So there's too much sort of clashing of colors. So let's just change the arrow to black. Okay, so you can just see that the RSI has broken the RSI and is now moving up. So there's strong underlying momentum, isn't there? Hello, Ebenezer Meher. I hope I'm pronouncing it. Hi and welcome. Okay, so let's go now down to the daily chart. Okay, again, we want to look at Google. Okay, we want to look at Google, and we're going to look at it relative to our zones. Okay, so let's just bring up Google here. And I'm going to share the tab. And this is a daily. So we're looking at the weekly. The weekly is looking terrific. Okay, okay, here is the daily. What can you guys see with the Bollinger Bands? Can you guys see the Bollinger Bands starting to expand outwards for Google? Can you guys see that? So you're getting a push down here, and you're getting a push up here. Okay, so the volatility is expanding. Not only is the volatility expanding, where is Google relative to the zones? It's in what we call zone 1. What's zone 1? Zone 1 is the upper red, upper blue. That's the bullish area. What about the RSI? It's above 50. Okay, zone 1 expanding. We're in zone 1, and the Bollinger is expanding, looking very healthy. So that's Google. Okay, let's take a look at Amazon. Okay, Amazon, again, let's go back to the weekly, and what we'll do is we will look at it relative to that 30-week exponential moving average. Okay, so let's take a look here. This is Amazon. Okay, this is Amazon. Where is it relative to that 30-week exponential moving average? It's above it. What direction is that 30-week exponential moving average? It's moving in that northeast direction. It's moving nicely in that northeast direction. Okay. Where is the RSI? It's beautifully sitting, almost sailing in the bullish area above 50. So the weekly chart of Amazon is looking fantastic. What about the daily chart? Let's take a look at the daily chart and where is Amazon in the zones? Okay, so I'm just bringing that up. Give me a moment. All right, it's not quite as sort of forceful as Google. We saw that Google Bollinger Band expanding. Okay, that was beautiful. We don't have that here, but what we do have is we've got it Amazon sitting nicely in zone 1 and sitting pretty above 50. Okay, so Google showing really good sort of power behind it. Amazon not so much, but it's sitting in zone 1. Okay, let's take a look at the next one, and the next one's going to be really interesting. Apple, because Apple's actually been struggling as of late. Let's see what Apple looks like in our top down. Okay, so this is going to be a really interesting one. So we'll go back to the weekly, and let's just bring up Apple. All right, sharing the tab. Here we go. All right, this is Apple. You can see this $200 level over here. Just wanted to show you Apple's. So there's the psychological level here at about 200 bucks. Importantly, it's above that 30-week exponential moving average. The 30-week exponential moving average starting to point northeast again. Okay, so there is some bullishness that's starting to manifest. You can see that the RSI hit 50. 50 is neutral, but now it's hooked up, it's hinged up. It's gone back into the positive area. So Apple looks a little bit more challenging just because we've got this overhead resistance at 200. 200 is psychological. Round numbers tend to be psychological areas, right? Let's just take a look at Apple in terms of the zones. Okay, let's just bring that up. All right, so just over the last week or so, Apple has started showing signs of life again. So you can see it was actually floundering. It was floundering in zone 3, and then just over the last 1, 2, 3, 4, 5, just about the last 5 trading sessions, it's pushed into zone 1. And we just want to keep an eye on this. So out of all of the stock that we've looked at, Apple perhaps showing relative weakness, hopefully developing some sort of relative strength now. So it has moved into zone 1. So that's interesting, right? That's interesting. So let's take a look at Meta. Okay, Meta Platforms is Facebook. Okay, let's bring that up. This is looking terrific. Okay, this is Meta. This is looking really good. It is making new highs, sitting really nicely above the 30-week exponential moving average. The 30-week exponential moving average pointing up beautifully. Look at the RSI, just really just maintaining above that 50 area. And let's take a look and see what's happening with Meta in terms of our Bollinger Bands and our zones. It's just looking absolutely terrific. Okay, you can see it's in zone 1. Again, I would suggest not quite as explosive as Google, but Google, I think, was more sort of a squeeze in the Bollingers, and then now we're getting that expansion in volatility. Not so with Meta. Meta's just moving along at a decent pace. Capital gains accumulating. and there is some expansion in volatility there, looking very interesting as well. So we've done four. We've got three more. We've got Microsoft, Nvidia, and Tesla. Let's see if we can just yeah, exactly, Raj, exactly. So we'll keep an eye on those real rates. Okay, let's just have a quick look. Microsoft, Nvidia, and Tesla. So we'll just run through those very quickly. Okay, we'll go through to the weekly, and let's go through Microsoft, MSFT. Okay, also making new highs. Let's get rid of the drawings here. Okay, it's probably tending towards overbought. I wouldn't be surprised if it pauses, pull back. There's some profit taking, but any sort of profit taking dip in the uptrend. But the new highs here are Microsoft. And if you take a look at Microsoft in terms of the zones, absolutely outstanding. Take a look at this. It's really an outstanding chart. Look how the Bollinger squeezed. See how those Bollinger squeezed that all of a sudden, pow! There's that expansion in volatility. Okay. Just cognizant of time here, so let's just run through Nvidia and Tesla. So we'll bring up Nvidia next. Okay, and here is the Nvidia weekly. Now this is all about AI. Nvidia chips are specifically developed to power artificial intelligence. New highs. Where is it relative to that exponential moving average? It's above that 30-week. That 30-week exponential moving average has hinged up. It's pointed up. Perhaps getting a little bit overbought there. But if we go through to the Nvidia daily chart, okay, you can just see this expansion in volatility. It is superb. So from about the 8th of January, Nvidia just explodes upwards. So you can see the Magnificent Seven having that effect on the stock market, really having that effect on the stock market. Last but not least, okay, Tesla. And we'll start off with the Tesla weekly chart. Out of the Magnificent Seven, which one is the weakest? Looks like Tesla. Below their 30-week exponential moving average. See that? So that's interesting. And the 30-week exponential moving average starting to turn down. So out of the Magnificent Seven, Tesla's showing relative weakness. Isn't that interesting? Let's just go through to the zone analysis and see what Tesla's looking like in terms of the zones. And it's not looking healthy. We're in zone 3. So perhaps a little bit oversold, but out of the Magnificent Seven, Tesla definitely the weakest. The others showing really good strength, particularly Meta, Nvidia, Google. Those were really showing nice strength. All right, that is as far as we go this morning. If there's any questions, go ahead and type those in. From tomorrow, we'll go back to doing our sort of normal agenda, normal itinerary. But I think in particular, keep an eye on that real rate, and we want to see if RSP picks up. Okay, we want to see if we get that broader market participation. All right, nothing coming in, so we can wrap up here. So have a good day ahead, everyone. Good evening, and join me again tomorrow. We'll do it all over again. Thanks very much, guys.